Thank you for joining this month's Dr. Azin call. I'm Mike Flaherty. I'm substituting for Jonathan Poyer this month. I'm joined today by Ryan Dunnigan and Anna D'Amato with Kennedy Capital. So thanks, Ryan and Anna, for joining us once again.
Thanks, Mike. Happy to be here. Good afternoon, everyone on the call.
And I know that we've got a couple of things that we want to emphasize today. And the first one I know is kind of this whole sort of flight to safety that's really kind of bolstered what's going on in big pharmaceuticals. And then after that, Anna's going to talk a little bit about a situation that went on with a company called Sarepta this week that was very unfortunate. But I think that that it's always kind of good to be clear-eyed about some of the things that go on in this space. So, but with that, Ryan, I'll go ahead and toss it over to you.
Okay, perfect. Thanks, Mike. So Mike mentioned a flight to safety. So I think we all know year to date, markets are down, the S&P is down, the Dow Jones is down, the big healthcare indices have unfortunately underperformed. But an area that has been actually quite positive is healthcare and specifically large pharmaceuticals. So this is the IHE, so the US Pharmaceuticals ETF, a chart year to date. You can see performance has actually been quite strong, up about 7% year to date as of this morning. And this is certainly aided by an investment flight to safety. So large pharmaceuticals tend to hold up well. Not only are they typically dividend paying stocks, but the user base is quite sticky, revenues, earnings quite supportive, even in a more maybe questionable or uncertain macroeconomic backdrop. So large pharma performance, really strong year to date. However, we can contrast that with the performance of biotechnology. So here's a chart year to date of the XBI biotechnology ETF. And you can see here we're down a couple percent, 2-3% here year to date in that ETF. But to take this a step further, I think this is a really sort of under the covers of biotech, some really interesting things are going on. So if we flip to the next slide, you'll see a divergence of performance within biotech. And so the blue line that you're looking at here, and this is, we're using the Russell 3000 biotech as a proxy. You could use the XBI, you could use the IBBQ. So pick your poison in terms of a biotech ETF here, and it all will sort of look the same. The blue line is going to be those biotechnology companies who have commercial sales. So sales greater than, we define that as $10 million, but think of any biotechnology company that has revenue. And we can contrast that with the orange line. Now, the orange line is going to be all those biotechnology companies that don't have revenue yet. So their assets are all in clinical trial development, maybe preclinical, phase 1, phase 2, phase 3, but not yet commercial. And so this chart goes back about a year, and it goes through the end of February. But you can see early in 2024, there was a bit of a divergence between those two types of companies that stayed relatively consistent then towards the end of 2024, entering 2025. However, you then see a pretty big split. And so what we've seen lately is a lack of appetite from investors to own smaller biotechnology companies, to own those biotechnology companies that do not yet have revenue. We can speculate on some of the reasons why. Certainly, higher interest rates are one of the reasons. Investors are broadly concerned with the uncertainty in the economy right now. Will these companies have access to capital in the future as they need it? There's also been a lack of M&A of these clinical stage companies. So we all get excited when a company has great phase 1 data, maybe they'll get acquired. We just have not seen large pharma dip down and buy those companies in any sort of quantity or consistency over the past year. And so that has hurt the outlook for those companies as well. And conversely, we've actually seen large pharma dip down and buy smaller biotechnology companies with commercial stage assets, with revenue generating drugs. That has actually been more of where we've seen the M&A. So that divergence is, I think, quite interesting and tells a nice story of what we've seen year to date and also over the end of 2024. We can go to the next slide. Great. And then just a couple macro factors that we're considering. The last few months, we've talked a lot about how politics has impacted the sector. Certainly, it's impacting, I think, now every sector with tariffs and some other items. Some things we're thinking about, though, maybe you should keep in mind as well. The impact to the NIH, we covered that in great detail last month, so I won't walk through it all again, but we've continued to see impact to our companies from changes made at the NIH, changes at the CDC, changes at the FDA. These are not necessarily all bad for healthcare, but they are changes. And so it necessitates a monitoring and a selection of some particular companies here to avoid maybe some of the pitfalls. We also have Medicaid on the list. So I think we're all familiar that the Republicans are working to extend the tax cuts. And in order to extend those tax cuts, it's likely they will need to have something to pay for those tax cuts. And Medicaid is one of those areas that could potentially be cut as a result. So another area, if you have companies in your portfolio that have exposure to Medicaid, something to just be aware of that is on the horizon. And with that, I'll pause there and see if Mike, if you have any questions for us.
Very good. Well, thank you very much.
Thanks
And
for the question.
we'll go ahead now and pass it to Anna. Anna, this was a very unfortunate situation that happened with Sarepta and this young man with the Duchenne's muscular dystrophy. Um, before I, while Ryan was talking, I just looked this up. I didn't realize that Duchenne's affects 1 in 5,000 births worldwide. So this is a high profile disease. This is a high profile company that's been getting a lot of press here over the last few years. Tell us a little bit about what happened and kind of the implications here going forward.
Yeah, definitely. So you're totally right. I mean, this is the most common muscular dystrophy in the US and globally. So it is the most common, though it is still a rare disease. And as you mentioned, this was a young man who passed away after receiving the Sarepta Therapeutics drug. Duchenne preferentially affects males just because it is an X-linked disease, although females can get it, usually in a milder form. So I was just going to walk our investors and clients through the data today and talk about how this might have happened and what are the options for Duchenne, or also called DMD, patients going forward that also have this side effect profile, and then some that maybe don't, and the pros and cons of each of those. So, the title says it all, right? This event was very negative, very unfortunate, and it has been pressuring Sarepta shares. But first, before we get into that, I want to explain more what the disease is and what the drug does. And so the disease, as you mentioned, Duchenne muscular dystrophy, or DMD for short, is diagnosed really early in life. Typically, kids start experiencing muscle weakness before age 5. And so this is something that is progressive. And so from their diagnosis to age 20, 25, maybe even 30, they have this progressive muscle weakening, slowly becoming non-ambulatory, usually in their teens. And it does lead to premature death, typically via heart or lung failure, which is, again, weakening muscles make it impossible to breathe if your diaphragm's not working, which is one big muscle, or the heart is just one big muscle. So muscles are so important in those parts of our body. And Elevidys, this is a gene therapy, Sarepta's drug, is a one-time infusion that actually replaces the drug that is mutated and causes Duchenne muscular dystrophy. And so this is the whole concept of gene therapy, right? One and done, replaces the gene that's causing a problem. And I've just posted a figure here on the right showing some of the data from one of their clinical trials. This is available on the drug website if anyone would like to go dig deeper into their clinical results. You can just look up Elevidys online. But essentially what you're seeing in these purple bars is that in several measures of function, so these are all different tests that you can do on patients to see how easily they can get up from the floor, how easily they can walk down the hallway, things like that. Patients who were dosed with the gene therapy did better. And so this is the data that the FDA approved the drug on, and it is approved for ambulatory and non-ambulatory patients today. And so that is how it works. And then going right to the event that caused the drop in shares, it's interesting because acute liver injury is actually already on the label of this drug. And so this patient died after liver failure following liver injury. And it's known that this is a potential side effect, and the reason why is the drug class. So AAV, or adeno-associated virus, which I'll go into on the next slide, there are several drugs in this drug class, and they all carry the same risk. And so it's very unfortunate that the patient potentially also had a prior infection that predisposed them to liver failure. And then the drug was kind of like the final straw. And so we don't know definitively that this was linked, but it's looking like it was, hence the stock reaction. Because if you're a parent and your child has Duchenne, you might now think a little bit harder about, do I want to take that risk and give this drug to my child? And so I think that is generally the concern that's bubbling up among investor conversations. You know, does this impact the end market share of the drug? And then getting into the class effect of AAV that I've talked about, essentially this is a type of virus. And the reason that we use this virus is actually to deliver the gene for this, to basically deliver a healthy copy of the gene that's mutated in the disease for Duchenne, but also for other diseases that use AAV gene therapies. This is how it works. And so this virus is very unique because it infects human cells pretty efficiently, whereas other viruses might not infect as many cells upon one infusion. And we know that it doesn't replicate within the cells. And so unlike another type of viral vector, which is lentivirus, which can then cause malignancies down the road, with AAV, there's a lower risk of malignancies later on in life after dosing. And so this has really become the preferred vector for approved therapies. But it is a virus. And so your immune system and your organs recognize this as foreign material. And that is part of why the body can sometimes have a very negative reaction to infusion. And it's also why patients can't be dosed again later in life with another AAV therapy because their immune system will react to it. And so I know we're running low on time, but very quickly, what do you do if AAVs aren't safe, right? Are there other options for these patients? And the answer is yes. So there are several. There are things called oligonucleotides and siRNA therapies, and these are transiently going to modify how genes are expressed. And so they can temporarily, so it's a long-term dosing kind of paradigm, but they can temporarily provide the gene that's missing. There are also things that are not genetic at all that just reduce the inflammation that's caused from these dying muscle cells and can actually slow disease progression over time. And so I think that those are some really interesting options. There's also more in the pipeline, of course, that's not yet approved for these patients.
Okay, Anna, thank you very much. You can see, folks, why it's so important to have somebody like Ryan who really understands and gets into the dynamics of things from a business standpoint, and then somebody like Anna and the rest of our team that really understands this science inside and out. So thank you for joining us.